All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we're about 12 minutes away from the ECB rate decision. Nothing will change. It should be a non-event. So I wouldn't worry too much about it at this point. But, you know, it's obviously the ECB meeting that will be listening in at the press conference with Mario Draghi. Again, one thing I do want to reiterate with the ECB just before we get started, I really don't think the ECB is going to be as dovish as so many markets are, so many analysts are expecting. However, this chart did stick out to me yesterday, and this is one of those things that we have to pay very close attention to. Though, if you look at this is an hourly chart, okay, so let me not influence your thought process by let me remove that line, okay, and let's look at what we had yesterday. Okay, so this is what we were dealing with yesterday, and I can even remove this. We were talking about how important this this 112.30 level of support is, okay, and you can see this trend line that came through here. Let's get rid of this red one right here. Okay, let's just draw this. Okay. So you can see we have slipped below this trend line here. Now, this is where we currently sit. We sit at 112.26. The risks are at this point in time. Shoot, I didn't want to do that. The risks are. Damn it. I'm too. I was too zoomed out. Really. Okay. There we go. So the risks are at this stage in the game is that we start pushing lower. Now, that doesn't mean we're going to. I have no, matter of fact, I'm long the euro dollar. This is not going to help me. So if the euro breaks down, let me be the first one to tell you, if the euro breaks down today, it's not going to help my cause. Okay. So I don't want you to, I don't want you to think, oh, you know, oh, Blake's really bearish here in the euro, and he looks, you know, and it's going to be, you know, he's a dollar bull. I mean, I guess overall I am a dollar bull, but I happen to be short the dollar right now, so I don't know how much of a dollar bull I am at the moment. But in all actuality, the euro is threatening, and if we break through and close below a 111.50 today, that is not good for the euro. It's not. I'm long the euro pound. This is not going to help my cause. Okay. I'm long some Aussie dollars. Not going to help my cause. I'm short some dollar yen. It's not going to help my cause. So if we break through 111.50, I'm not going to be a happy camper. I'm going to tell you that right now. But it is the risk right now. If we break through this 111.50, that's really key support, because if it does, this flag pattern's in full effect. And if it's in full effect, we are likely to drop out of this channel and start a whole new move lower going into the FOMC meeting next in a few weeks. Okay, so let me reiterate. I'm not going to be happy if we break through 111.50. Now, I'll be happy for the opportunities that it's going to bring moving forward, you know, because it'll probably unlock us out of this, you know, out of this range, and then we're starting to look at a real big flag pattern in play. Look, that makes me happy that what the future will bring, but immediately, yeah, I'm not going to be happy if we break through the support. It's not going to help. It's not going to help what I'm doing today. Okay, I will take some losses. Now, in the event, okay, in the event we rally back, you know, we might be very, very easily, what we could be doing is developing some sort of, you know, flag pattern too that's more of a sideways channel right now. But what I'd be looking for at this point is what's going to get us back to safety. So at what point, you know, that's not what I wanted to do either. At what point if you're a bull, a euro bull, at what point do you breathe easier? Okay, because if you look at this trend line, this hourly trend line we were dealing with yesterday, right? This is the hourly trend line we were dealing with yesterday. We had support at, we had it down here, but we were looking at this blue line. If we come back and break back above that blue line, that will take the immediate pressure off the downside. Okay, that doesn't come in until about, by the time we get there, 112.80. So we'd have to break back above 112.80 to relieve the downside pressure. We are still in a range environment, but man, I'm telling you, we are threatening to turn bearish here on the euro. Threatening. Okay. All the ECB has to do today is say, yeah, we're going to have to extend QE past September 2016 the way it looks now. We have a lot of different tools that we can use and blah, 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 blah. And, next thing you know, the euro's trading at 111. And the euro starts turning really bearish, excuse me. Okay. Now, whoa, 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 whoa. Hold the horses. We have a special person listening in today. My buddy, hold on. I'm gonna actually allow you guys to see something. My buddy Lauren is listening in today. Hold on. I'm gonna stop right here. You guys can read this. He said, "Good morning. Hope you don't mind me listening in today. Hope all is well." That's from Lauren G. Now, I'm obviously not gonna give you his whole last name, which his whole last name is written right here. I'm not going to give you his whole last name because Lauren was a independent trader in our chat rooms for a couple of years. He left us to go trade again at a bank, and we miss you, Lauren. It's good to have you here. So he's in Canada trading at a big bank again at the desk, and we miss you having here. So of course, why would I ever mind you listening in, for crying out loud? All right, well, welcome. Glad that you're here, especially on such a good day, on an ECB day. So anyway, those of you that remember Lauren from the chat room is listening in. So good to have you back, Lauren. At least and you've always got a seat welcome with us when you come back. All right, back to the analysis. So let's go back into the cheers to you, Lauren. He said cheers, and he said, very kind of you, bud. Very, very kind. Well, nice to have you here. Okay, let's go over to the cable. So, and as you can tell, Lauren, we're still at it. Years later, here we are, still going. Okay, so the cable. Obviously, the cable's trading pretty heavy right now, and I wasn't too convinced yesterday that we were ready to turn the corner. And I said, as long as we were trade below 153.30, I can't get long the cable. I can't even consider it. I think our highs yesterday were right at 153.24. Yep, 153.24. So that's obviously resistance today. Can the pound be dragged higher today above 153.50? Yes, it's possible. The euro is going to have to scream back up towards 113 in order for the pound to have any type of shot at that. Remember, the services PMI came in 2 points lower than expected. Matter of fact, if you look at services PMI numbers out of the UK, they're at levels not seen since August of 2013. So very weak showing out of services PMI. Services PMI number is a very important number in the UK, kind of like it is for the US. The UK is a services-driven economy. Same with the US. That's why the ISM services number today is going to be very important in the United States. Okay, so with that being said, the cable is being supported at 152.50. If we drop below that, 151.80 is the next stop. So 151.80, 152.50, okay, is support. Now, if you don't know where I got that 151.80, let me just make sure I reiterate to you that it is the horizontal support here. Also, of the last move up, it's 161% extension. So 151.80 is our next stop, should we break down. Now that is a risk because if the euro breaks through like 111 or and change today, and we start breaking down, the cable's probably going to get drugged down with it. So again, you know, that's the risk with the cable. 153.30 is resistance. 153.30. We are we're in a range. Actually, I think I went bearish yesterday. I mean, as long as it's below 153.30, guys, we have to. I mean, we have to stay that way. It just, I mean, it's just not. It doesn't look good. It doesn't look good at the moment. All right, we can be saved today. The cable with Morrow drogging. All right, let's go to the Swissy. Now the Swissy looks it looks very strong, and it's pissing me off because all I want for Christmas is my two front teeth. My two front teeth, my two front teeth. All I want for Christmas is my two front teeth and the dollar Swiss to dip to 95.50 so I can get long. And that doesn't seem like it's going to happen. I mean, I'm sure it can. All we have to do is see equity markets show some signs of weakness. If the equity markets show some signs of weakness, it might, give the Swiss some strength. But yeah, I mean, look at the Swissy. I mean, this is an hourly chart. I mean, we're just holding. We're in a holding pattern. Now, this is not a good. That's not a good trend line to trade off of. I was just basically showing you, us kind of flagging, but that wasn't a really good trend line support. Looking at the whoa. The ECB meeting's coming up. Hold on, or the ECB rate decision. We should keep rates unchanged. Hold on. Nothing's going to happen here. If something does, I'd be shocked. Unchanged. Okay. So yeah, they left rates unchanged. All right, back to the Swissy. False alarm. All right, so here we are back to the Swissy. You look at the hourly charts, nothing happening. I mean, obviously there's some support right here at 96.80, but really, more critical support. Well, be right through here. 96.50 for today, so that is support. Especially if the euro gets a little bit of a squeeze. If the euro gets a little squeeze, 96.50 should be some support here. 96.50. And I don't even know if I'd be a buyer down there. I mean, I personally want to be a buyer, but I'd really, really prefer to be a buyer, down here or lower, obviously down here if I can get it. That's personally where I'd like to be long the Swissy. I'm not even interested in buying it right here. I'd like a little bit deeper of a pullback. I'm not saying I'm going to get one. I'm just saying that would be attractive to me to be on the long side. Resistance. So the 786 retracement comes in at, I mean, you can see we're knocking our head right up against some resistance right now, but at 97.64, I mean, do I really have to write down that number? I guess I do, huh? Let's say the euro craps the bed today. 97.65. I mean, okay, still in a range environment here in the Swissy. Let's go over to the yen. So again, I'm short the yen. I got short last night at 120.55. This is we were looking at this resistance yesterday, so that's nothing new to you guys. And so the overnight highs, which is going to be 120.68, so we'll just call it 120.70. That is resistance. 120.70. Support for the yen. Let's say the stock market starts to show some signs of weakness. Where is that going to take us? Well, if that's the case, hold on really quick. This is a real number. That's a real print, as you guys know. See? I'm going to write down 120 as being support today. I know it's pretty close, but if we break through 120, it should allow us to drop back and retest this 129 and change. Now, again, think about all this. ECB press conference. Press conference. Let's think it all out. We got press conference. Mario Draghi. He's like status quo. Going to continue with QE. Inflation expectations lowered a little bit, but overall, monetary policy is appropriate for the time being. Says nothing about further action. He's not as dovish as people think. Maybe his growth forecast stay, kind of in line with where they're at right now. Euro's going to bounce. Market's expecting a dovish dovish Draghi. Okay. Let's say the euro spikes. The euro rallies up towards 113. Does that weigh on the dollar yen? I think it does. I mean, the cable could be drug higher, the dollar yen could be drug lower, and if the dollar yen breaks through 120, because people go, wait a second, so Mario Draghi is he's not talking about extending QE any, and we really like QE because when we have QE, stocks tend to go higher. So I really like quantitative easing. So if he doesn't give any indication of that, the euro dollar may rally, towards 113. The dollar yen may slip through 120, and stocks may come under a little bit of pressure too, because stocks like that support of quantitative easing. So if that's the case, think this all out. If the euro rallies, if as a result of the ECB meeting, dollar yen could very easily pull back, break through 120, and next thing you know, we're trading down in the 119.70, maybe 119.50, possible. That's why I think we should pay close attention to this trend line support here. Okay. All right. Where am I at? Dollar yen. It is bearish. And you guys know it's bearish. It's been bearish ever since we broke down. Okay. Ever since we broke through here. It's been bearish. I'm keeping it bearish. I'm shorting it right now. I'm only looking to short it. So, kind of plan your work your plan. Plan your trade your plan, right? Okay. Dollar Canadian. It's the Canuck. We have trade balance today. Now, yesterday, we threatened a breakout. Okay. We had remember we had this all drawn out like that. I put this up here because we were, looking at this triangle. That yesterday told us exactly what the line in the sand is. All right. Now, the interesting thing about the Canadian, and I bought the Aussie Canadian, but I don't own the US dollar Canadian yet. And I don't think I'm going to own it ahead of non-farm payroll, but we got Canadian jobs report and, US jobs report, obviously. But, with the Canadian currencies, especially the dollar Canadian, I'm expecting a lot higher. It's played out exactly how, we planned it out for the last couple months. We have a big flag pattern. We break out, hit 134, pull back, give us an opportunity to buy it at 131. You and I, hopefully you, but I've been buying it every time we dip down to 131 and change. Been trying to buy it, and eventually I'm looking for a move to 140 to eventually 160 or 155 on a big cup and handle pattern. So 140, then eventually to 155. Not tomorrow, but over the course of 2017, if you will. So 2016, excuse me, if you will. So, and maybe even in 2017. So the plan is just to keep trading it on the long side on dips. Now, the problem with not owning it at the moment is the risk is you break through this upside and you take out the 161% extension and then you start just racing back into the top end of this channel, which is above 134. I don't think that's going to happen today, but obviously that's a post non-farm payroll thing possibly. So right now, just keep your eye on 133.25. That's going to be really critical resistance. You notice how we're not really pulling back. Crude oil, Iranian deal, crude oil continues to pull back towards 40. That's not it's not a that's not a small possibility that we rally. If crude oil starts to roll over again, next thing you know, we've got the dollar Canadian trading at 135, 136, because it hasn't backed off. That's the most unique thing about the Canadian. Even with crude oil rallying from 38 to 50, the dollar Canadian did nothing. Nothing. That just shows you how bullish this currency pair is and how bullish the dollar is against the Canadian. Now, where's a good place to buy it? I mean, because I don't own it and I would like to own it. And frankly, I would like to own it down at 131.50 again, but I just don't know if we're going to get down there. That's, the question that everybody asks is the $1 million question. How far of a dip are we going to come? Are we going to get? So the 618 is at 132. So should we get to 132 today? Poof, bam. That is where I'd like to be long. If we can get down there, I wouldn't mind being long at 132 ahead of non-farm payroll if I can get it. Okay, so that should be support. 618 retracement. Well, 131.93. So let's actually write that down to 131.90. Would be really a good area to be buying dollar Canadian for me anyway. I don't know about you guys, but that's what I'm looking at. Let's go over to I'm going to see if I can squeeze out the Kiwi really quick. Kiwi hasn't done a whole lot. We are still supported ahead of 63.15. You can see this really tight range. We've got 63.15 and we're actually making slight higher highs. Look at that, higher high. That is a higher high. Oh my God. That hasn't happened in like a decade. I'm just kidding. But it's a higher high. That's something, right? It's something. All right, so resistance, 163.75, or 63.75, excuse me, and 63.15. 63.15, key support, 0.6375, and still bearish. But man, if we can just break above 64 cents and turn us back into a range just above 64 cents. Ain't happening yet. All right, I'll be back in a few minutes. When I come back, we'll do the Aussie dollar index, take a real quick look at some Riksbank activity today, push the US dollar Swedish krona lower. We'll look at all that when I get back. Don't go anywhere. Thanks everybody for being here. All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. Let's go over to the Aussie. So the Aussie last night, got hit by trade, the retail sales numbers. Trade balance came in a little better than expected overnight, but still, a weak number for trade balance. Retail sales was weak though. That affected the Aussie. The Aussie was trying to make some headway overnight. In North American trade, yesterday, and then it obviously slumped. We are near pretty key support here. 69.70 should be really good support. Remember, this is the spike low on the move from last week's stock market debacle, if you will. That was a spike low in the Aussie. Then we rallied back. 127% extension comes in at 69.70. I bought the Aussie dollar last night, just a real small position, and I own it at 70.18. So I'm down 15 pips right now. To me, I don't mind playing it to the long side really small because I think this is just more of a consolidation down here. I'm definitely not going to be aggressive, and I don't want to have the position in non-farm payroll tomorrow. But last night I was like, I'll play it to the long side here. I could have gotten out and just gotten out for break even, but I'm just kind of sitting in it. It's not any big deal to me. I'm not really too worried about it. Unless the euro starts to break down, that will concern me. But 69.70 should hold as support today. 69.70. It is bearish, so make no bones about it. It is a bearish trend in the Aussie. I'm obviously playing counter trend right now. Resistance to really take the pressure off. Here, let me get rid of this. We don't need that right now. Is going to be a break back above 70.70. Okay. Now we went as high as 70.60 overnight, so 70.70 is really critical to take the downside pressure off. But if the euro spikes up to 113, on a less dovish Draghi, the Aussie dollar could easily spike back up towards towards that resistance without much of an issue. All right, let's take a look at the dollar index. So the dollar index, again, I don't have to get fancy here. 96.25, 95. Okay, that's it. Same as yesterday, same as today, same as 95.00. 96.25, range bound. Okay. Just I want to take a real quick look at the peso, see if there's anything going on here. Here's the peso. We talked about yesterday holding the 50% retracement, which we did right here. Still being supported down here. Nothing really going on with the peso. Not a whole lot to do. U.S. dollar, Norwegian krona still in our really tight range. Okay, really, really tight range. But overall, bullish, just hasn't broken out yet, and it's been doing nothing for the last couple of months, just sitting here at the very top of its range. Which obviously, the longer we sit up here, the more bullish it could become. U.S. dollar, Swedish krona has come down. It doesn't look very attractive to me, not at current levels. There were some comments that came from the Riksbank, but I didn't catch. I just saw them come across. I didn't sit there and read them all. I was busy doing something else. But anyway, the U.S. dollar, Swedish krona is a little weaker, I think, on some of those comments. Overall, not a lot to do with the U.S. dollar, Swedish krona either. Just kind of sitting up at the upper end of its range. All right, so here's your bias chart. There you go. I hope you can write that down, take a picture of it. Let me see if I can answer some questions really quick before the Trichet